morning, warriors. Hi, Craig, Kevin, I'm fine. I'm tough. I'm a warrior just like you guys. Hi, Ziggy. Everyone doing okay? Hi, Didier. Anyone down a few pips coming into this morning? Because I don't want you to worry about it. Don't worry about it. You have, Craig? Yeah, you know, made a few good turnaround Tuesday calls yesterday. Shorting the euro, no heat, no heat. EG, a little heat, but came through. As you can see on my screen, subscribers are pretty busy with a lot of patterns in play. But you're not always going to be in trades without drawdowns. So I don't want you to worry about a drawdown. You know why? It ain't nothing but a drawdown, not a margin call. It ain't nothing but a drawdown, not a margin call. So if you believe in the trade, don't sweat it at all. Never have to be perfect, that would be a lie. Don't try to be perfect. Oh, don't even try. But if you still like the trade, hang in there, because it ain't nothing but a drawdown. Anyway, we take it too seriously sometimes. So I see Blaker's on the euro pound right now. Here's the euro. So yesterday we were talking about this.
Wow, NASDAQ just, hey, Dale, by the way, great song. NASDAQ futures just hit new lows.
Yeah. So yesterday, Blake, you know, I said I thought we'd take the stops out here first before this. So I know you were short. You're long the dollar. So I know also, call me Dale Pinkert, that you took profits on this candle, this big break, because you were saying 20, 30 pips in this environment is great.
Yeah.
So I'm sure that once it turned into 50, 60, you went.
No. Let's back up here for a second. No. I took like 20 pips out of it, and I'm like, okay, and I did not expect. I mean, I told you, I didn't expect that big move. So like when I got profitable, and by the way, I took some really nice hefty profits yesterday. I was long the dollar against a few different, and yeah, I mean, I took some profits, but I could have made so much more money yesterday. And I mean, you know, who expected that was a literally like a almost 100 pip move. I mean, like who would have expected that? I saw it was like 20 to between 20 and 30 and with what I had, and I'm like, oh, I'll just pull profits here. You know what I mean?
Thank you.
Yeah, I said thank you very much and walked away, and then I kept watching, and I'm like, oh my God, like I had the direction right, I just didn't trade. I mean,
well, you're not as comfortable counter trend. I mean, you still have a bullish bias, so you felt a little uncomfortable, and that's completely understandable.
You're right, but you have to know where it stopped yesterday, and we'll talk about that in a few minutes. But I didn't want to interrupt you. Just continue on a little bit here. It's going to be me and you for an hour, and Stelios is coming in as well.
Okay.
Because, Steve is not going to be able to make it in today.
Okay. So. All right. So also talked about the S&Ps. You know that to me this was really the shakeout. Remember Jeff Cooper had 2480, 2480. He kept stalling there. But yesterday I showed the weekly and showed these tight ranges, and Steve was talking about a top in the Dow 9 days in a row. I think it's significant. I know it's only Wednesday, but we are getting a 2-week reversal here, face people. So I also looked at Grega. There's at least an ABC coming before another attempt, but you never know when it could turn into something special. So pretty negative weekly action here, and it kind of makes sense. The dollar bounces, it's deflationary, and the market comes off a bit. So One thing I'm kind of muddled with is what's happening in the bond market. But also, yeah, I wanted to talk about EG. So yesterday, I thought that we could break through. We had a wedge line here. Here it is. So it did get through the wedge line. And what I'm teaching here in FACE is that when you have throwovers, you just wait for the candle to close back inside the wedge line. So if you were disciplined, you got short at 59, it was still a nice scalp. I believe it's a pattern in play that Blaker has going on right now. And, you know, yesterday in the Dixie, I said this looks like a bull flag, little ABC, and we had this explosion. But interesting, after these two explosions, 93.90 might be it for this part of the rally. So I still think that there's another drive, right? Looks incomplete to me. So I'd still favor it. But, you know, if you were short euro and you took advantage of this, you know, we have the stop hunt here. Could it go lower from here? Yeah, it could. I think eventually we might even make our way back to above the weekly breakout, right? Weekly breakout here. But this is, we're starting to get a negative week, and the off number here was, I said yesterday, 49. So, you know, we're playing with it. We're at 35. But, you know, that's a nice scalp, and nothing wrong with going to the door, because you never know. What if this is just ABC for A, and we're going to get a B wave, you know, some type of rally. Maybe they'll go for the stops here now because everyone thinks they have it for the correction to 116, 115.50. But why can't we rally to 840, 1840, have another opportunity? This break was pretty close to 200-point break. So if we got up to 1840, equality would be 1640. And some type of fib extension could be, you know, into that 320-point range, would take us down to, you know, 1520 or so. So I'd be out and I'd be looking for rallies to sell. I don't know if I want to get long here. There's nothing. This looks like a flat little consolidation pattern. But the pound looks a little better. We're starting to get some, it looks like not really now. See this reading? So I can't buy the pound. Probably has another new low in it. And this was a star, something we talked about, the beach ball. So the VIX is finally starting to come out. You know, the market made new highs. Look what happened. VIX never made new lows. That was kind of a tell. And I think that our guest yesterday talked about the market making new highs. Don, when he was going over his 7th Sentinel stuff, said the VIX had not made a new low. So the big deal in the VIX is going to be higher. Here's my weekly on the VIX. And we need closes over this channel line. What is wrong? That's not good. Sometimes my computer won't take. All right, here. So there's a weekly. I don't know what I got that. Let's go with the daily. Okay, so here's a downtrend line here. If I extend it out, it's out around 15. But this is a pretty powerful move. I know there have been so many false starts. Why should this be any different? I don't know. It feels like what's going on in the market. And, you know, you don't have stocks like Amazon making new highs. You know, it was mainly the Dow for over a week. And they finally got the NASDAQ and S&Ps to do it. Maybe it was a stop hunt above the highs. But this VIX chart, if we start getting back over this 15 level, it's going to be a breakout. And there's so much complacency. And I'm not saying there's going to be a nuclear war. You know, I have no idea what's going to happen there. My only political comment is that if you were in North Korea and you were Kim Jong-un, I think I have his name right, why would you listen to Tillerson making the diplomatic efforts to avert anything getting out of control? Who has the football, right? So who has the football? That's what counts. And Blake, are you ready?
Yeah, I'm here. You know, I spent 15 months of my life on the island of Guam. It's a beautiful island.
Wow.
Yeah, it was a so you know when I joined the Marine Corps, I joined the Marine Corps when I was 18 years old. I did it because I wanted to go fight in Desert Storm. That was my that was, you know, as I was graduating high school. It was you know, 1989, and I said, you know, I want to go fight for my country, because that's and I was going to do it as a Marine. And by the time it was 2 weeks before I graduated from School of Infantry, and I was in Camp Pendleton, California, just down the street from where you're at, Dale. And I was at School of Infantry over in Camp Margarita, and no, it wasn't Margarita. The Margarita is where I was stationed. I'm trying to think of the name of the. Anyway, it's over by Oceanside, you know, a couple miles away from Oceanside. Anyway, I was there, and you know, I've got the the ground war ended, and half of the troops that I was with, half of the Marines, they went to the Middle East for basically cleanup duty. That's what they went there for. They got deployed there for, you know, just to clean up the mess. And I got put on Guam, so I got the, you know, I got the cake deal. So I went to Guam for a year and, well, almost a year and a half, and we guarded nuclear weapons there, because that was the largest nuclear weapons stash in the Pacific at the time, was in Guam. And I spent almost a year and a half of my life there. And it's such a beautiful island. It's really Japan's Hawaii. I mean, if you
Wow.
Yeah, it's gorgeous. And you know, if you're a scuba diver, I mean, the shipwrecks there off the coast, because, you know, Guam has a big coral reef around it. And so during World War II, when Japan came and attacked and took Guam, they didn't know that there's a big coral reef barrier around most of the island, and so all the ships would try to sail in to attack Guam, and they'd hit the coral reef and sank. Yeah, they'd sink, and so there's a bunch of shipwrecks down there. Anyway, and the Chamorro people are great. I lived through a couple of typhoons there, and helped rebuild elementary schools, and this is all, you know, at the age of 19.
So this must have really hit home when you heard
it
that.
Did. Right. No, obviously it's a U.S. territory, and a stronghold too for military operations, you know, where we have a really big military naval presence and Air Force presence, because we keep, you know, now we don't, from what I understand, and I don't know this anymore, we don't keep the nukes there anymore. But when I guarded the nuclear weapons, we'd made the biggest nuclear weapons movement when we closed down that base in 1992, 91, end of 90, I don't know, 92. It must have been the beginning of 92. Yeah. Beginning in 92, we made the biggest nuclear weapons transfer and closed down that base. And then I left. I was supposed to be there a year and a half, but I left like a month and a half earlier or something like that. Anyway, it did hit home a little bit. You know, that's one of those. It's such a beautiful place, and the people there are just phenomenal. And you know, being a Marine on that island was really cool, because we were rare. There was only, I don't know, maybe 250 of us Marines, and everybody else is like naval or Air Force that was in the military there. So we were definitely we created and caused a lot of ruckus around the island, and people knew who we were, and you know, we'd run patrols through that island all the time. I spent many nights in the jungles of Guam I stayed the night out in the jungles there. So.
Wow. You have a lot of fond memories of your service to the country.
Well, yeah, well, you know, you tend to forget the bad stuff and remember the good stuff, and that's kind of the that's the way things happen in the military. You don't really remember all the bad stuff.
Well, the traders need that attitude.
Yeah, exactly. Well, that's the only way you can get through this, right?
Yeah, you know, you dwell on it and get into fetal positions after a loss. So you have the wrong temperament for doing this. You're going to make yourself sick. You need to close your account if that happens. You know?
Exactly. So, you know, I want to talk about the euro dollar and the importance of where we're at and where we stopped yesterday. You know, I blogged on like FX Street. I talked a lot about it. About the possible false breakout of the euro dollar. I think we've plotted it out pretty well over the last 2 weeks.
I remember that. How often are you publishing there, buddy?
No, well, I mean, it's summer, so it's going to pick up obviously after summer. Right now, it's like you know, trying to find things to post about is not the easiest thing in the world. But
write a story about your Guam experience.
No. That's no one wants to do that stuff. Anyway, and I got a lot of good stories though. Stuff that if I had a few beers, I might be able to blog a little bit. Yeah, exactly. But we, you know, over the last 2 weeks, we talked about the euro dollar and the risk of it rallying, hitting the 2010 spike lows, stopping everybody out who was short, which we did. And now we've reversed, and it's working out exactly. I mean, you know, I might have missed the move by 40 pips, you know, or so, because I talked about making a move to 118.70. I actually was shorting the euro at 118.50. It did make it all the way up to 119.13. But I mean, look, I'm not one to profess that I can I can do like the Nostra Pinkert type of analysis, but I have to admit I've called this one pretty good thus far. But
your levels are top notch, Blake. You know, part of the reason I'm seeing things better the last 3-4 months is your work, Greg's work, Nick's work, Steve's work. So, I mean, when I tweet that I really have an edge being part of this team, I'm not BSing the public. Someone said to me yesterday, Blake, I miss the intimacy of LAR because there was more interaction between the community and me. So it was more of a social environment. But you know what I said to him? I said, well, even LeBron James had to leave Cleveland to get on the dream team. So, well, so it is an edge, and your stuff is, before I'd only know once in a while when I'd see something you tweet or you come in for an interview, but don't sell yourself short. Your levels are great. None of us can take 100% out of a move.
You're exactly right. We can't. And but let's and I appreciate the kudos here. And by the way, for those of you that if you use ForexAnalytix, I update the majority of these support and resistance levels every day. So first thing that I come in and do in the morning is I come in and update, most of them, at least all the majors, and then I try to get there through all of them. Depends on how much time I have. But what's really critical today in the euro dollar is where we stopped yesterday, and that is we're within striking distance, maybe 10 or 15 pips of that level. And this is very critical for those of you guys that are. If you happen to be short the dollar right now, you have to be very careful here, because if the euro breaks through 117, that's going to be devastating for the euro dollar. And I'm not just talking about the euro dollar. You got to look at the euro against a lot of stuff. I mean, and I want to talk about the euro in general, because, and I missed your comments about the euro pound yesterday, but I did post a pattern in play yesterday with the reversal candle of the euro pound. This is a shooting star. If you guys missed the shooting star, it was a shooting star in the euro pound. So we basically stopped and reversed there. But you know, the euro dollar, if it breaks through that support, the euro pound is vulnerable. I don't know if you've seen the euro yen. Look at the euro yen. I mean, this is classic. And if you guys, I want to.
Steve showed it yesterday, and I was telling him that FA was very bearish, multiple yen crosses. Even though it wasn't a pattern in play, the bias was very bearish on euro yen.
Yeah, like if you read like the August 7th, comments, the false breakout from last week has not materialized in a breakdown yet, so we could be setting up an ascending wedge, as mentioned over the weekend, but we have actually since then broken down, and so. But look at the euro yen. Okay, so this was, and guys, if you use ForexAnalytix, the day the day which was the week before the French election, I
remember it.
I tagged that Gartley pattern like within 50 pips. I mean, in that low basically, and I got long, and of course I only made like 150 pips, and I thought I was king daddy at that point. But obviously this is
pretty good out of 2,800 pips.
Yeah, I mean, it was a huge. I mean, this has been a huge. I was like 50 pips off of that bottom there, but
yeah.
It's been obviously a really big move. But look at what's happened to the euro, and look, oh my God, something else is developing too that's really big. I'm sitting here, so I can't update ForexAnalytix at this moment, but
again, breaking down.
Take a look at the dollar yen here. Yeah. The dollar yen is right at trendline support. That is very between that. You look at the dollar yen right now. This is risking a move below 109.50. We break below 109.50, and we could really see probably a move back to 108.80. But more importantly, that's going to signal to the market that we're seeing some risk off. And you got the dollar yen that looks quite heavy. You got the US dollar Mexican peso, which is within striking distance of the 18 level. And here, let me move this right here. If the peso breaks above 18, that's just another sign that the market is really going risk off here.
Blake, you need to repost that blog piece about what could happen to emerging market currencies if we got a correction in the stock market.
I still haven't done it. I need to do it.
Okay. I thought you wrote it.
No, I never ended up writing it, and I should. Well, speaking of which,
you're gonna have to stay after school today, buddy.
I may have to. Speaking of which, I've actually got to pick up my kids after school today.
Right.
My kids started school. Take a look at the South African Rand. This one is not on. We don't cover this on ForexAnalytix. I did buy a little bit today just to kind of keep it as a tracker, but look at the daily chart of the U.S. dollar South African Rand. And remember, we have elections here, and but look at the setup.
Yeah.
Look at this. This is a channel right here. You can see it. This is right. This is a channel. Okay.
Yeah.
That's a channel. We're above the 200-day moving average, and the risk here is that we start breaking higher in the Rand. I mean, these are all signs of the market going a little risk off, and that's why you have to pay attention. I mean. And I want to tell you, you talked about Turnaround Tuesday yesterday, okay? Turnaround Tuesday is it's a more of a phenomenon, and if you understand the reasoning behind Turnaround Tuesday is Monday is Mutual Fund Monday. All the mutual funds come in and buy up everything on Monday, and then Tuesday you usually peaks around Tuesday and then rolls over. But yesterday was pretty key because we hit and I tweeted it with the ForexAnalytix Twitter handle, and if you guys follow ForexAnalytix via Twitter, you got the tweet, and you got the analysis on ForexAnalytix as well. We hit 161% extension. Now, if you think before yesterday, we hadn't quite hit that 161% extension, but we hit it and then we reversed hard, and that was a very, very classic reversal yesterday. And if you look at the candle, we hit new highs, we reversed to the lows, and
textbook.
It was textbook. It really was. Now the thing is will we materialize into something a little bit greater? Here, I'm trying to grab this blue line and it's not working for me, so let me do this. Okay. Will it materialize to anything greater? I'm not sure yet, but I'll tell you, if I was long equities, I think there's a lot of risk here. Obviously, we've had a great run, and if you think about like a correction, like what kind of correction we have? Well, let's just say it's a percent away from here, which a percent from where we're currently at is like, let's just say 24, 25 S&P points, from where we're currently at. I mean, it puts us down here at like, 2,400 or 2430. A 2% correction takes us down to like 2,400. Look, that puts us where we were at 2 weeks ago, 3 weeks ago. It's not like you think about it like, oh my God, if we went to 2,400. It's going to be devastating. It's only a 2.5% correction. It's nothing based on, and we were just there like literally last month. So it's not, it wouldn't be too much to ask for, but we have, there's a lot of big developments that are happening right now. Have you looked at precious metals? Precious metals, I mean, look at silver. Silver's closing in on resistance here. Gold, we just broke through that channel. We were just noted the channel this morning. Now we're at new trend highs. I mean, gold looks bullish. Silver looks bullish. Yen looks strong. Emerging market currencies look weak.
Nick has a tip in silver.
Does she? I missed that this morning.
I think she's in.
Oh yeah. She's Gartley from 4 hours ago, and I missed that this morning. I was too busy updating everything else. So let's take a look at silver. Let's take a look at the harmonic analysis, and she says silver has made a messy ABC correction back to 1620 and reversed. See 1 hour chart. ABCD messy. Okay, is what she was saying. But now we've broken through that trend line and we target 1751 and 1836. That's pretty, and you can see it's moved obviously quite a bit since she's written that. There's gold.
Good morning,
yes.
mate.
Hey, Steve, I didn't think you were going to make it.
Yeah, it depends. I'm here, but I don't know how well. But just to add something in what you said. If we close above current levels, more or less, both in silver and gold, we will have outside white candles for both of them on the weekly chart, which is also, especially if you consider, for example, gold had previously 3 positive weeks, and then we had a black candle last week. And this week we seem to be continuing lower, but as it seems the weekly candle is going to be very bullish again, which is also a very bullish sign as long as we close above roughly current levels. So it's very interesting to monitor metals because indeed something is brewing here.
Yeah, what probably set a lot of this off yesterday is if you, Jeffrey Gundlach, who, is obviously known as the bond king, he had, oh shoot, did we just have data come out? Hold on. We did. We have building permits, non-farm productivity, unit labor costs. Let's take a look at the dollar yen. Sorry, I wasn't even paying attention. He talked about volatility and how it's very undervalued right now, and he talked about gold having a cup and handle pattern. He actually tweeted that. It's boosted up the VIX. The VIX is strengthened as a result of Gundlach's comments yesterday, and then wow, the dollar yen's bouncing back a little bit here. That data came in. Hold on. A little bit worse than expected, but the dollar yen's bouncing anyway, regardless. Yeah, so the precious metals could actually really put in some pretty key reversals. We still have a lot of time left for the week, but especially the inflation data coming in tomorrow and Friday are going to be very critical to what happens with the dollar and what happens with precious metals. But and obviously what the tensions that are brewing in North Korea or with the Korean situation are obviously boosting everything along as well. So hold on, I just want to take a look around at the market really fast. So the euro's bounced a little bit here. Remember, the euro's at really critical support, and we've bounced off of that support already. But I'm going to tell you guys right now, if the euro gets a foothold below 117, the dollar is going to explode higher, I would assume, and it might not even be. It might not be just dollar related. It may be yen pair related. Like I had showed you guys with the euro yen's walking a very fine line right now, and I think the euro yen has the potential to drop down to 128, 127 if things start to get a little messy as far as equity markets go. Another thing that's happening today, a little bit later today, is going to be the RBNZ. RBNZ is not expected to move on rates. And we still have this head and shoulder pattern, by the way, in the Kiwi, and it still points towards 72 cents. The Wheeler is probably going to be a little bit more cautious, especially with the events that are unfolding there in the Asian Pacific region. He's probably going to come with a little bit more of a cautious tone, and I wouldn't be surprised if he tries to talk down his currency, because the Kiwi has been probably for the RBNZ a little stronger than they would want. So you got to think that the Kiwi might come under some pressure following the RBNZ today. I would think it would, and so you got to be careful with the Kiwi where we're currently trading. Let's take also a quick look at the pound, and we're going to take a quick gander at all these majors. The pound is still underperforming here. Here, let me get rid of that 38%. We're kind of hovering around the 38% retracement after we crack this trend line. I'm not very excited to do anything with the cable at this point, but it is still trading relatively heavy. The Aussie is trading a little heavy as well after the Chinese inflation data last night. The Aussie's at risk. If we break back below 78.40, which is this blue line right here, that's going to be a huge disappointment for Aussie bulls. And you can't talk about the Aussie without looking at the Aussie yen, because the Aussie yen as well, this has been a real big disappointment for the bulls, because we had a false breakout from a couple weeks back, and now we're trading at the 38% retracement. And the Aussie, you know, it's at risk of a move lower. Oh, since I was talking about the yen, let me take a look at the
Euro yen on the 1 hour has a 3 driver right now, community, and the guppy has 2. Guppy's diverging at this recent low as well. Maybe you get a green candle, but Euro yen on 1 hour, you have a 3 driver, guppy a 2 driver. Go ahead, Blake. I'm sorry.
Thanks, Dale. No problem. I wanted to point out that the Nikkei, the Nikkei, this came out of, this is big if you trade, you know, the yen pairs. You have this triangle pattern that's developed out of the Nikkei, and then we broke down today. All right. Now the Nikkei is also coming up to, or coming down to rather, some pretty critical trendline support, which has to be watched carefully, because if the Nikkei starts to break through, like let's just call it 19,600, we're at 19,700 right now, so we still have some distance, but the Nikkei is not bouncing. I mean, if you look at the Nikkei futures, I mean, we're just hovering around the lows for the day. So you know, if the Nikkei futures start to break down towards this 19,600, you got to be really careful, and that I think would coincide with a break of 109.50 on the dollar yen. If that happens and those happen together, then you've got to expect more yen strength, and you know, that means, you know, all the yen pairs could really continue to buckle under some pressure here. So that's what I'm monitoring right now with like the yen and the Nikkei. And I wonder, is Stelios around? Stelios, you here?
Oh yeah, I am here, Blake.
Hey Stelios, how's it going?
Hey, I'm very good, thank you.
Hey, I got a question for you. There, you know, over the years, we've seen the yen strengthen with, you know, risk aversion. So if the market becomes risk averse, the yen naturally will have a bid in it. Do you have a logical explanation for the strength of the yen under periods of duress in the markets? And I, you know, the way I've always looked at it is that the Japanese hold, you know, so much of their debt, you know, but that's just, you know, oh wow, wait, hold on, the peso's moving. So I just thought I'd throw that question out to you.
You know, it's a very good question. I'm not sure if it has anything to do with the fact that they own their own debt, you know, like by 90% of it, I think, or something like that. Very little external ownership of the debt. This question I've actually asked myself many times over the past few years, and I actually don't know the answer. I really don't know why. I do. Again, do you? Okay.
Steve knows. Is it the carry trade, Steve?
Exactly. It's unwinding of carry trades when. Yeah, exactly. When in fear that risk off is going to come in the market. So,
but we haven't had the carry trade for years.
I know, but the fact still remains, Blake. First of all, initially, because your comment was excellent, actually, we had the carry trade for many years. So back then, when we had the carry trade, which was extremely intense, it was simply unwinding of the carry trade trades, you know, in face of, let's say, risk of danger. Afterwards, first of all, yen never stopped being one of the most appealing currencies to lend. Okay, so still, and we do still have carry trade because there are a lot of big investors that are lending in yen terms to buy exotic currencies. For example, my boss at the fund very usually buys currencies against the yen, and I'm talking about high-yielding currencies like the ruble, etc., etc., etc. So we do still have a carry trade using the yen, but it's not. It doesn't include, as I've said in the past as well, currencies like the Aussie, the Kiwi, because you know their yield is very low now to be considered, you know, traditionally carry trade. Second of all, it's also like a full self-fulfilling prophecy. it became a habit for so many years that now it's also a reflex of the market. Okay, because you expect that it will happen, you do it, so you actually create the movement that everybody's expecting to happen.
Right. And that was more the answer that I was searching for from you guys. Is that it is still, and by the way, the peso's testing 18 right now. It's more of a habit, institutional and trader habit during periods of risk off is buying yen. Even and if you think about, like, okay, well, you know, you got this threat in North Korea, yet people are still running to buy yen, and I think it perplexes a lot of traders.
Yes, for sure. But it's what we would have expected, right? I mean, look at the same is happening, by the way, with the Swissy. I said many times that the Swiss is a good sell, but I many times cautioned and said that, listen, the only thing that can reverse this is some kind, because the Swiss remains a safe haven. It's the two currencies that remain a safe haven, the yen and the Swissy. If something happens that's seriously risk-off, geopolitical, or something now having to do with the Swiss is something that brings intense jitters to the eurozone, then you should expect the Swiss to be bid. But other than that, people were selling it. But look what's happening today. We've seen one of the biggest bearish moves we've seen in a long time. Why? Because now the market is pricing in a very low probability, of course, because for the market, I mean, this movement we see, if you see them in context, remain very subdued. Okay, I mean, the market is pricing in the probability of a nuclear war, but what kind of a probability? 1%, let's say, because if actually the market was pricing in something more than a negligible probability, we would have seen huge moves happening today. But even that, brings a strong bid to the yen, strong bid to the Swissy, because those are the most traditional safe havens.
By the way, the dollar Canadian is back above 127, and the dollar.
Keep in mind, Blake, that we had good Canadian data. You missed it because you were talking at that point, but the USD CAD is ascending, although the Canadian data came in higher than expected.
Yeah, it was
about building permits, and they even revised the previous number higher, actually.
Yeah, it's that's what happens when people are looking to shoot first and ask questions later, and that is not a good thing for Canadian longs. That the Canadian dollar is getting hit following this data. So it's something to I think everybody should be keeping in mind right now. Stocks are trying to do the normal North American recovery at the moment. You can see that here. I'll show you the S&P. The S&P is trying to press higher ahead of the North American Open. Nasdaq as well. Nasdaq really can't. Oh, this is a chart that I was watching yesterday, and I think it's an important chart. We had this like Gartley pattern, and I actually shorted the Nasdaq at the highs yesterday. So, but I'm watching how this trend line's holding, and I want to see if it manages to hold through.
What would a Gartley imply? It implies the high, but does it ever imply a target, or you just start doing fib extensions to come up with it?
I personally do fib extensions or fib retracements.
Right.
But in this case, because it was such a big reversal in the S&P and the Dow yesterday, I've let it slide as far as where I was looking to target to the downside. I'm more curious to see how we react at the open. The stock market tends to recover coming out of Europe before the US Open anyway. Whether people decide that this is the place that they want to really start buying equities again, I'll have to see at the open. So that's what I'm focused on right now with equities.
You know, I think we'll really know we have some damage coming, major damage coming. Like, you know, we could hold this pattern you're showing right here. It'll happen with an overnight gap that the market can't recover from. Like last year, we opened 1,000 lower and came back all the way. We'll know the market has changed tone when it opens lower and accelerates to the downside, possibly leaving a gap and people trapped above the gap. So that's what I'm looking for to really be kind of a sign of this cycle is ending, that type of day.
Yeah, it makes sense.
You know, where even the PPT can't bring it back.
Yeah, well, I have a lot of faith in the plunge protection team. I do. You know, they just go in and just start buying futures. It's an easy game.
And selling VIX, most importantly.
Yeah, and then they sell volatility. It's an easy way to win. You know.
Yeah.
And that's that. And speaking of volatility, I mean, you got the trend lines really drawn out the way I would too, Dale. You know, it's you see volatility here. I mean, you know, we start spiking above, you know, 14, 15. That's when you know the market is becoming very fearful, and then we start, you know, looking at the you know 17 to 20 range in the market. I mean, but we've got a lot of work to do here, and volatility gets slapped down pretty quickly because it's a you know, everybody knows that's the easiest trade around is just, but it's very, but the market's very complacent in volatility. But you noted right when Gunlock said that about volatility yesterday, that was
right there.
Right there.
Yeah.
When Gunlock mentioned volatility, and we have, I mean, obviously we're coming down a little bit right now, but it's really been nonstop VIX buying since you know, then, yeah.
That last chart you showed is a classic example of, ever hear the expression that markets top with violence and bottom in silence? So if you look at that longer term VIX chart that you had up there, try and find a more silent market than that.
Right. Hey, Steve, it says he's wants to come in for the last 15 minutes before the your guest comes on. So, Steve, I'm going to pass it over to you.
Yeah, we got another military guy coming in, Sarge. So he's still an active reservist, Blake.
Oh, okay. Yeah, I gave up my reserve boots about 23 years ago.
Theoretically speaking, I'm an active reservist as well, and I think Stelios is as well. Let's hope it's yes, Stelios.
And I was a sergeant too, by the way.
Yeah, same here.
Well, I could see you in the trenches, Steve, with your iPhone.
Yeah, right.
All right, you guys have a great day.
By the way, Blake, in my opinion, I was speaking about it yesterday before you go. We had 10 consecutive up days and 9 record closes for the Dow. Yesterday, I cautioned about it, and in my opinion, the most important development in the stocks yesterday was the outside, was the key reversal, an outside shooting star on the Dow, because you know, this is the first crack we see in a very long time in the Dow. I don't know. I know that most people monitor the SPX because it is considered, to be honest, the benchmark and the risk barometer. But you know, Dow has been leading lately, so I was paying special attention to it. And
you also showed Euro Yen on the verge of breaking down.
Yeah. And let me show something else. Blake showed it. He showed a short-term picture of that. But remember, yesterday I said that I'm paying attention to the Nikkei in combination with the USD Yen, because we have a bigger formation. Blake showed like a smaller part of the chart, but you remember that we saw this large ascending wedge that actually started like in 2016, and you remember that I said Dale, that a break above or below this triangle is not going to be itself, something critical, because if we break higher, we're going to have to test and see what happens with the wedge's resistance. If we break lower, we're going to soon find the wedge's support and see what happens from there. More or less in the same levels, we have the previous highs. We had, like, you see this area of interest that actually kept the market from ascending further in the first during the first couple of months of the year, and that we tested it like at least 4 times, and we're currently testing this confluence. So at the same time as we've already seen, Blake showed that, we're testing the triangle support in the USD yen. So for both the index and the USD yen, we are currently at a very, very critical juncture. Because
you ever hear yourself saying that almost every day? Today is critical. Today is critical. It's almost like, almost every day really is critical, but there are some that are more than others, and it
depends. When you're monitoring like 50 tickers, almost every day one of them is going to be at a critical level. But in this occasion, and knowing the effect and the importance of the USD yen and its influence in several FX pairs and its correlation with risk, etc., I think that it's something that we need to be very, very, very carefully monitoring. Okay. My pleasure, Arif. He says thanks for having a look at the Dow. To finalize with the Dow, yesterday's candle with the Dow is the first crack we see in the bullish trend, and it remains to be seen if we get a continuation lower from there. That's a strong. That's a very strong signal. That's a very strong signal. So today will be the tell if yesterday's reversal was the true thing or not. By the way, Blake mentioned USD-MXN. Let me show you a chart. USD-MXN yesterday and the day before yesterday, and several days ago did it once again. It was testing the confluence of the 1790 area and the descending wedge resistance. If you remember, we made an attempt to be long down here because we thought that might be the end of the descending wedge. That didn't work because we got this move lower, and we had said that in reversals you need to try again, and this time we seem to be breaking out once again, and this is more likely to be the true thing. So I'm waiting to see where we're going to close today, because for the USD-MXN, this might be a very important day as well. So that's another pair that's worth monitoring. I know that Blake monitors it very, very closely. I have a question about the USD NOK. Let's have a look at it. Okay, nothing much has changed with the USD NOK because we have seen a reversal with the USD NOK, but as we write in analysis as well, as long as we remain below the 8 zone, which, let me put that in context, how important the 8 level is. You can see this area here. We cannot treat this as an event. I mean, this can easily end up being a bear flag that will see continuation lower. Okay, so don't jump the gun in the USD NOK, because as long as we hold the 8 zone, there has been no damage done to the overall bearish trend. Okay, so be extremely careful with the USD NOK. It's not the time yet to be bearish, to be bullish, not yet. Gold, we've already shown it. Blake did. As it seems, the previous move lower was simply a bull flag. That's what we see, at least from, this was a textbook bull flag. Why? Because it lasted little. The consolidation was short in comparison to the move higher, and the projection, if you project actually this is a bull flag, is actually above this double top at 1,295. But obviously, no matter what the target of this bull flag is, I will still caution that if we get to 1,295, you need to be very careful and see what happens from there, because that is the super critical level. Okay. Same with silver. Silver, actually, yesterday I was more cautious with silver, but silver ended up pushing higher yesterday. And the result is that silver yesterday posted a morning star formation, because this third candle actually closed above the 50% of this first candle lower. So this was a bullish event, and the continuation we're seeing today is a testament to that. So it's natural to expect further upside. So silver actually did what we expected: the correction lower and the move higher. It corrected deeper than I initially expected, but still that means that it remains after this flash crash that we had. It remains well bid and can easily get back to 1770 once again, and we see what happens from there. Let's see more questions. We covered the Nikkei. I think Kiwi crosses could get blotched between. Yes, Luca, I totally agree with you. Kiwi crosses are in danger, especially ahead of the RBNZ today, and of course, risk off never benefits the Kiwi. USD Swiss. Okay, today's movement about the USD Swiss is everything has to do with Swiss itself and the flight to safety, as we said. We can even see that clearly with Euro Swiss, that finally, after a long time, it has a strong down day. This has to do because obviously threats of a nuclear war or whatever immediately bring a very strong bid both to the yen and the Swissy, and of course this spills over to the USD Swiss. That's why we have one of these days, on one of these rare days, that we have the euro being negative, albeit slightly, and the USD Swiss being negative as well, actually more. Be careful here though, because this was a bullish break, and keep in mind that if something happens in the following hours to alleviate the fears that the US might go into war with North Korea, you might see a complete retracement of these moves, and this also, of course, involves anything that has to do with the stock moves. Okay. Speaking about the stocks, the DAX is also at a critical level because it is retesting once again the 12,100 support level, and the break below here then opens the door for 11,800. So actually a close below here opens the door for at least 300 handles of more to the downside. And obviously
what's that, the blue moving average at 200 there, Steve?
That's a little bit higher actually. And that you're wrong in this case, above 12,350. So we've been trapped for several days in a range between 12,100 and 12,350. So a break below here begins a new leg lower, and as I said, I really believe that if that happens, we're going to see 11,800 quite soon afterwards. Okay, so this is the level you should have in mind about the DAX. And now about the euro yen that you talked about it before. Yes, we did get a break lower yesterday, and we didn't get the thrust higher first. That it was like a 50-50, and in this case, this might lead to at least, I wrote yesterday, to at least a test of 128 but we might even see a deeper retracement all the way down, to these highs up here, which is at around 125.70. Okay, so be careful about this. You definitely, this is not the point to be long.
Thank you, Steve.
My pleasure. Have a nice day.
I hope you feel better.
I don't, but we'll see.
Yeah, you know what? You're a trooper. You never desert your post. So
I'm trying to.
And you were talking about DAX, so that's a perfect segue for bringing in Stephen Guiffay. Stephen's CNBC contributor. Thank you so much, Sarge, for taking the time to join us and talk to the FACE community. I'm going to make you a panelist now. Should be able to hear your voice in a second. And then I want to show my screen. Are you there, Steve?
Can you hear me now?
I can, Sarge.
Outstanding.
How are you, buddy?
How you doing?
I worked on you a long time, didn't I, to get you to come in here?
You sure did. That's for sure. You're persistent, if anything, which is a testament to your survival in the business.
Yeah, survival it is, Steve. So talking about survival, I'm interested in if there's really still an edge being on the floor of the NYSE as there was compared to the old days of open outcry. Is there any advantage to being on the floor? Because the last time I went back to Chicago to the Merck Board of Trade, they combined, to me it looked like a bowling alley except for the options pit. So what do you see when you're down there to give you some insight?
Well, to be honest, there isn't the advantage there once was. I mean, I think that's
Right.
obvious and plain for all to see. The exchange has contracted from 6 rooms at its height down to 1 room. And between the New York and the American, the manpower requirement down there has gone from about 7,500 down to less than 500. So, yeah, like our counterparts in Chicago, there are times when there is value added on the floor. There's no doubt about it. I'm not going to diss my floor broker colleagues down there, but the best part of the advantage is confined to the trades that can be negotiated or the trades that still rely on the old auction process, which even if it's electronic in nature, is more relevant around the open and the closing price, because those are trades that actually time stops and supply and demand are evaluated by, let's say, a specialist for one larger trade than during the day where most people's orders are, most funds orders are chopped up into very small slices and try to beat the high frequency guys all day long.
Okay, so Sarge, why don't you tell us a little bit about your journey, how you ended up on the floor of the NYSE? Are you originally from New York, and how did you originally get involved in the business? How did you get from there to where you are now?
Oh my gosh, my journey is bizarre.
Great.
Well, I joined the Marine Corps out of high school.
Okay.
I got to Wall Street a couple of years later through a friend of my father, because it was very hard to crack any walls down there without knowing somebody. And in a roundabout way, I did. So I spent a few years getting lunches for people and writing up floor tickets, because I wasn't qualified to take orders over the phone yet. So I actually just
you were too young? Too young?
I just didn't have any experience. And in those days, if you've been in the business, things were a lot rougher than they are now. I mean, if you made one mistake, you were out the door pretty quick. So they used to shield us young guys.
A lot more elbows thrown around too. But go ahead.
Sure.
Yeah,
that's for sure. By 1987, I was a frontline, what we used to call clerk, which now they call trading assistants. And I was there for the crash of '87. That was probably the craziest time that I've ever spent in auction market crowds. And with a close second being the first day we came back after 9/11. But over the years, I spent the majority of my time with Credit Suisse, where I was involved in all sorts of things, from block trading to, I was always on the floor, but block trading to investment banking to you name it. From there, once Credit Suisse decided to downsize, because they eventually laid off every single person they had on the floor, they no longer have representation down there. That's the old First Boston, if anybody's older than 50 down there. I moved on to Meridian Equity Partners, where I became their U.S. economist. And I eventually moved on to Deep Value, Stuart Frankel, and I spent a year driving a forklift when I was out of work. People don't know that, and and I'm no longer on the floor. I'm running my own operation. I'm still on the floor from time to time, but I don't spend all of my time down there because it's no longer necessary for me to do so. So you'll see me on the floor tomorrow if you watch Fox Business, but today I'm working from my office.
You're all over the place, CNBC, Fox, everywhere. Obviously, the content and your presence on camera attracts viewers, and I always love your commentary, and I really recommend anyone that's hearing us get a hold of Sarge to get his daily emails that kind of give the highlights in a very quick few sentences of what you should be paying attention to if you're just having your first cup of coffee.
If I can plug my notes, they're published at thestreet.com these days, courtesy of Jim, where I also manage the stocks under 10 portfolio for.
Yeah, I was thinking about that. I hope that you're never talking about the FANGs in that group.
No, they're not in that group, but I talk about whatever I want to.
Well, I hope they never are, is my point. Stocks under 10. What a world that would be. So, you seem to have a holistic approach to the market. You're at times your stocks specific, but seems like you'll break things down a lot in different asset classes. And I've heard you talk about everything from crude oil to the Fed to gold, bonds. You try and have a balanced type of portfolio. What I like most of what you talk to people about through your writings is we're all going to be wrong, and we're all going to take losses in the market. And you tell people to get back up on their feet, to dust themselves off, and not dwell. It's part of the game. So how do you manage risk, Steve? What's your best method for? And also your style of not going all in on a trade. I caught an interview you did on CNBC where it may have been a big down day in Amazon or something, and you said, I bought it and I hope it goes lower. So has scale in trading, is that a big part of how you position yourself, and how do you manage risk?
Oh, certainly. I mean, I'll probably never initiate a position with any more than 20% of my intended position, because you're almost always wrong at some point when you enter. And likewise, when I hit a price target, I never get all out when I hit a price target, because why should I sell myself short? So I trade in increments of 20% of my intended position. That's how I've always gone about it. I usually hedge myself through the options market if the opportunity presents, or if the value is there in terms of premium. The funny thing is, I'm on your show, and probably the only thing I've never traded is Forex.
Okay. All right. Well, I bet you do pay attention to dollar movements, even though you don't trade it, don't you? Oh,
of course. I mean that's the whole reason why the earnings for the multinationals have performed so well over the last half year or so. Right. I mean, if it wasn't for dollar valuations, we wouldn't see this move in the Dow Jones or for the top half of the S&P 500 for that matter.
Right, and that's why the Russell's been lagging, right? Russell does better with a strong dollar.
Oh, indeed. Small caps don't do well in this environment, and small caps are also suffering from the potential or lack of potential for tax reform, because small caps pay a much higher effective tax rate than do the larger international firms. They're paying close to the 35%. So if relief isn't coming for them, well, that's why they're going to be performing so poorly. Likewise, if we see momentum from the legislature, which I know might be a long call at this point, this is where you're going to see your gains towards the later half of the year, if it looks like tax reform might actually occur in early 2018.
Sarge, I know a lot of people have been brought to the trading cemetery for trying to predict or short this market. You've been around a long time. You've seen many corrections. Do you think the action we're having in VIX this week, and if we get a close over 14 or so in the VIX, that we could finally get what used to be normal, like a 10% correction in the market? Do you think we're in that time window? Seasonally, this is a period where there can be vulnerabilities into the fall. Isn't that true?
Sure. I don't know how much of a predictor the VIX is anymore, but
Okay.
we certainly face some possible headwinds, the most immediate being North Korea. I mean, if something stupid happens with North Korea, well, you're going to see a 25% correction this week. I mean, but more realistically, maybe not more realistically, but let's try to stay out of such gigantic geopolitical risk. If we do that, then the next real bump in the road is Mario Draghi's speech at Jackson Hole. If he plays
Right.
a dovish central banker, well, that changes the dollar's trajectory for the short term.
Right. Do you think that we have shifted? You do pay attention to the dollar. We were in a big bull market and the dollar peaked at 104. Our president wanted a weaker dollar, so we'd have more of an export edge. And like you said, it's paying off for multinationals. Do you think this is a major trend change in the dollar, or just a pause to refresh before the bull market and the dollar resumes?
No, I think this is a change in specie. I don't know if we go all the way back to the 80 level, but if Super Mario is forced to tighten monetary accommodation over in Europe,
Okay.
then yeah, you're going to see a weaker Dixie eventually, even no matter what he says at Jackson Hole. And I know you guys don't trade the Dixie, you kind of scoff at it because it's a tool that you guys use to.
I like the Dixie.
Oh,
I mean, it's 60% euro anyway. They're almost the same chart,
But,
Go ahead.
but I hear from a lot of currency traders that they laugh when I use the Dixie to measure my financial universe. So
Yeah, well, they ought to let go of their ego, and ego stands for edging God out. So, it's a nice contract. I think that if you trade Swiss or yen or euro, if you don't pay attention to the dollar index, it's like trading IBM without following the Dow. It's like trading Intel without looking at the NASDAQ. That's my view. You have to look at the basket first, right? And then break it down.
Oh, certainly. I think so. I mean, I like to, as you know, trading groups. When I go into a sector, I like to have 3 names in the sector that I'm playing, usually in the same direction for the sector, and that's dependent on many things, from the macro to the currency to sentiment. Sentiment's always a big deal, and it's much tougher to gauge. So you kind of have to.
What do you use, Sarge? Nowadays, a lot of people used to use COT. Now there's DSI that we use. What do you use to gauge sentiment in different instruments?
Well, I use the surveys. I use the consumer surveys, the manufacturing surveys, and I get out and talk to people as much as I can. I cross the moat. Unlike our central bankers, I will go to a Walmart, which I'm long, by the way, and I will ask the people that work there what they think. I'll go to Home Depot, which I'm also long, and I'll ask the people there what they think, what they're seeing, what's selling. How are prices moving on certain items that I'm not familiar with? And you have to be a real social person. And I know, being on Long Island most of the time, it's not representative of the entire nation, but it does give me something of a sense. I'll walk around the mall. I'll try to study transactions. I'll try to study how people in Victoria's Secret are parting with their money or not parting with their money. How content the staff seems in certain places, whether they seem like they're worried about their jobs or whether they seem like they enjoy their jobs. So
Wow, are you old school, Sarge?
It's legwork. I measure parking lots. I go to Chipotle Mexican Grill and I'll count the people online. And I'll count how many empty spots are in the parking lot. I mean, that's part of the job if you want to make money.
Hey, I have a new handle for you.
Oh yeah.
Yeah, gumshoe analyst. What do you think? Gumshoe analyst for Sarge. I got a bell on that one. So let's move to a few other asset classes that I know you follow. A view on bonds and the Fed, Sarge. Where's your head at? We've rallied, since the election. We're at around 2.25 10-year. Do you think we're ever going to break out over that 235, 236? 265 is kind of the line in the sand for a lot of bond bulls, bond bears. Which way we go in there? And is the Fed close to being done?
The Fed, well, I think balance sheet management is is basically written in stone. That's going to happen. They have some kind of mandate from above where they have to address this now. I don't know where it came from, but it seems like they're immovable on that. What's in play is the December rate hike. All right, just probability for such a hike went over 50%. I do think the jobs report last week was rather strong. I do like the way international trade is going. Factory orders have been better. The ISM has been better. Small business optimism is better. We just saw this morning that productivity actually beat unit labor costs for the first time in ages last quarter. So there are parts of the macro that are improving. I know I like to be kind of negative on the Fed and negative on the economy, and people expect that from me, but I am seeing signs that it's actually getting better this time. Unlike the smoke and mirrors we've seen for the last 8 years, things do seem to be suddenly getting a little bit better. Let's see what consumer price index looks like.
And it's global too. It's almost synchronized with the rest of the world this time, isn't it?
Oh, it's actually, we're behind the curve. It's actually they're actually a little bit ahead of us on the improvement, which is also helping our multinational firms reach this 11% or so increase in earnings that we're seeing for the quarter.
Okay, oil was a big driver last year. You know, the world was coming to an end at $25 oil, and all the MLPs and high yield debt was under pressure. And once we got that low in oil, really that was a green light for the rest of the market. Oil shares have dramatically underperformed most sectors over the last, say, 8 months. Where do you stand on oil? Do you think $60 is possible? There's still a lot of bears that think we could go back and retest those lows at 25. That would make the Middle East even more of a mess, don't you think?
I think oil's tough. It's an area where I've taken it in the mush this year, to be honest with you. It's a drag on my P&L. I'm still long a couple of names that I consider to be quality, like Schlumberger and Apache, although Apache missed earnings badly this quarter. I'm not going to give up on oil just yet. We just saw resistance here in the low 50s. I think we need to hit 53 and get past that to get to 60, because oil trying to trades in windows that open and close. If we go down, if we take a hit here, depending on what OPEC does and depending on our rig counts, a 44 handle would not surprise me much. I'm not going to puke these positions at lousy prices. They both pay decent dividends, and I do run a dividend book, so I can move them from my energy book to my dividend book and not have to face the hickey that I've forced upon myself in the space. But that's, you spoke about that earlier. That's taking the good with the bad. That's understanding that if you're going to get a couple of punches in, you're probably going to get hit with one or two also.
You know, we've talked about a lot of different asset groups. I find you also a little bit different. That I know a lot of stock guys, quote unquote stock guys. They won't even pay attention to precious metals, and I know that you at times participated in any view or positions. Really came to life last night. We've been in a gradual uptrend in both gold and silver the last couple of years. Any views on it?
Well, I currently recommend a 7.5% portfolio allocation towards gold. I've been as low as 5% and as high, and I've never been higher than 10% on what I recommend. And I think 7.5% is kind of about where I've decided is a compromise. I do think you need it in your portfolio. I think something like this proves it. I think it's up $11 today. I haven't looked in the last few minutes, and it's not on my screen right now. But if, like I said, if something stupid happens with North Korea, you're going to see a spike in this that will probably spin your head just the same way that your equity portfolio will hurt you in the other direction.
Do you prefer gold itself through the ETF or participating in the miners? And I was always taught that the mining shares lead the way for the underlying commodity. Have you noticed that phenomena?
A lot of them are laden with debt, and it's really hard to know which ones are the right way to go. I will trade the ETF just as an instrument of trade. I don't prefer ETFs. I don't really like ETFs all that much. As far as the 7.5% in your portfolio, if you actually follow what I say to the T, I would prefer to have that in physical gold somewhere that you can go to in the event of the day that you need clean water and ammunition.
Okay. Speaking of ammunition, Sarge, I know you talked about joining the Marines as a young man. You're still active in the reserves, aren't you?
Actually, I got out last April, about a year and a half
Okay.
ago.
All
My
right,
contract ran up, but I was in the National Guard at the very end, so I've served in a component of the Marine Corps and a component of the Army.
And I also know that there's a spirituality side to you, Sarge. You know, you and I have exchanged a few emails in the past. How does that help you? And how do you go between the two worlds of being a trader out there for mana and keeping an eye on the bigger picture where, you know, we're all trying to grow our accounts, but we're also taught to lay up treasure in heaven. Has that helped you as a trader, having a strong spiritual background?
Immensely. It's helped me in everything I've done in life. I'm a practicing Catholic, for those who care to know. And I think if you are faithful in almost any organized religion, it's a coping mechanism. It doesn't have to be religion, I guess, but it helps you, let's say, allay your stress. It helps you realize when you do screw up that you're supposed to screw up sometimes, and you're going to get past this. And losing money is not even close to the worst thing. All you got to do is travel to New York City in the subway system and take a look at some of the poor people around you. I mean, it does drive you to care for these people. It does drive you to try to reach out, you know, to not give them money, but to bring them socks and to bring them food, things that you think they need, things that you notice they need.
You know, Sarge, thanks so much for being with us today. You're one of the real people out there. I really appreciate you have great insights on the market and your character, and I'm a fan of Sarge 786. That's where you could find
986.
986. Yeah, okay. Sarge 986. Thanks for the correction.
That was my badge number on the trading floor. That's why that's.
Oh, okay, Sarge, and really a pleasure speaking to you. You know, I hope that your portfolio blooms and you reap a great harvest this fall. And it's great to know you. And thank you so much for coming in here and finally relenting to be my guest here for an interview.
The pleasure was all mine. Thank you for having me, Dale.
All right, you are one of my trading warrior brothers. Everyone, thanks, Sarge. And Face, have a great day, good hunting, and we'll see everyone tomorrow. Thanks again, Sarge.
Take care.